The best of Money Matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. I'm Hongbin Jeong. Now, after a period of rapid growth in the fine wine market, prices are now at levels not seen in several years. According to recent reports from LivX and Cult Wines, the LivX Fine Wine 100 Index has fallen 4.4% in the first half of 2025, while average trade prices have dropped nearly 6% compared to last year. For collectors and investors, this represents a rare opportunity to acquire some of the world's most sought-after wines at attractive value. Yet, the market is not without its challenges. Liquidity constraints, storage requirements, and the risk of counterfeit bottles make fine wine investing a nuanced proposition. So how are current price trends reshaping investor behavior? Which regions or vintages are likely to outperform in the coming years? And what strategies can both new and seasoned investors adopt to navigate risks while capitalizing on opportunities in this evolving market? Well, to find out more, joining me now is Joe Alim, who's the Managing Director of Asia of Cult Wines. Joe, welcome back to the show.
Hi, Hongbin. Thanks for having me.
Thank you so much for joining us. Well, Joe, let's take some of the recent reports. I mean, from LivX and Cult Wines, they indicate that fine wine prices are at multi-year lows, with the LivX Fine Wine 100 Index down 4.4% in the first half of 2025, and average trade prices falling 5.9% compared to 2024. Now, this follows a period of strong growth in wine investment during, 2020 to 2022, driven by pandemic-era wealth and global demand. So can you give us a quick overview of the current state of the fine wine market?
Yeah, for sure. I think, what you say is very, very accurate. The wine market went through, a strong period of growth from sort of mid-2020 up until really the end of 2022. And since then, with, higher interest rate environment, a slowdown in the Chinese economy, we've been through a pretty substantial correction period for the last sort of 2.5 years. Towards the end of 2024, we actually started to see a bit of momentum building in a positive direction. I think that a lot of wealth creation has happened over the last 18 to 24 months, and wine prices have been at an attractive level for quite some time now. So you started to see some of those indicators start to creep through with, the leading names starting to trade up, trade volumes increasing, bid volumes increasing across platforms. And then actually what happened around that kind of a middle part of Q1 of this year is that we had, the trade tariffs put in place by Trump on a range of products, and, European wines were affected by that. So that kind of momentum that was starting to build was really kind of just the wind were taken out of the sails at that point. So for the last kind of 3 to 6 months, we've been in a bit of a kind of slightly fragile holding pattern, if you like, and those conditions are kind of persisted that we've seen throughout 2024. Because, the US is a massive market for wine, and, the importers there couldn't really buy with high conviction because, after 3 months, they wouldn't necessarily know what the cost of their wines were going to be because, after the August 1st deadline that was put in place by Trump, no one really had an idea of what wines would cost to import into the US. So that really meant that kind of momentum that was starting to build didn't really develop any further. But since then, since the tariffs have been arranged, so the rate is 15%, we've now seen that, okay, the market has a platform here. It has certainty around what wines are going to cost. The US is obviously a massive market. And actually, since that point, we've started to see those same indicators start to come through that we might be about to turn a corner. So I guess the kind of lay of the land, in short, is that, we've come through that difficult period, but there are some kind of tentative signs of life starting to show, but still very much at a low level and, 5-6 year lows for really all major regions.
Okay, so what factors do you think have contributed to this drop in prices?
It's a multitude of things essentially happening at the same time. I think that, the wine market is very much a market that essentially has kind of two sides to the coin. You have people that are looking to buy for investment purposes, and those that are looking to buy because they want to buy the wines, they want to enjoy the wines. And that latter group aren't necessarily driven by price trends or maybe looking at the minutiae of the detail. They just buy the wines that they want to buy when they're feeling flush, right? And I think over the last sort of 2.5 years, both sides of that coin have been affected by the macro environment. We've had higher interest rates, one, which really was the catalyst for a lot of things like wine kind of falling in value because that money supply tightens up. But at the same time, you have risk-free returns for investors, anywhere from 5 to 10% depending on which institution you bank with. So that urgency to come into the wine market and invest is not really there because, typically speaking, what you should expect from wine is kind of 8 to 12% per annum over a long-term period. And if you're getting that in the bank, then that kind of incentive to come into the market has been taken away. So that sort of cohort of buyers maybe dried up somewhat over that period of time. And at the same time, you have, a general kind of decline around the world of people buying things that they don't actually need. You see all the luxury goods companies, LVMH, Kering, Richemont, etc. Their sales have really suffered over the last couple of years. And that, the wine market is pretty adjacent to that. A lot of the same people that are buying products from those companies are people that are interested in fine wine, like collecting wine, like drinking wine. So I think there's been a general kind of malaise around the world with regards to that kind of spending. And on top of that, coinciding with the same period of time, you have a slowdown in the Chinese economy, which is unquestionably important here because China is a massive market for wine. There's huge numbers of buyers there. And, I think the slowdown that was caused by the property crisis has meant that people have bought less wine over that period. And on top of that, maybe slightly more recently, there was a directive from the Chinese government to say that government officials couldn't drink alcohol during business meetings. And I think that general kind of rule that was put in place maybe kind of gave pause to people drinking wine in public. And I think it's had quite a profound effect on the market over there. So all those factors maybe happening at the same time has been particularly damaging for wine prices. I think that in isolation, maybe one or two of them the market could have weathered. But I think everything happening at the same time was quite damaging. That's why we've seen what we've seen over the past 2.5 years.
Okay. Well, thank you for that overview there. But historically, how has the market responded to, similar periods of price declines?
The market's been through cycles like any kind of healthy market. I think, there's been one trend for wine prices over the last sort of 20, 25 years, and that's that, when they've gone down, they have come back up. If you look at the broad measure of the market, the LiveX 1000 index, which is seen as a real benchmark, since 2004, that index has increased in value by 250%. And at any given time during the last sort of 21 years, there's been periods where prices have fallen. Now, admittedly, this previous kind of 2.5 years is probably the most significant, but that's coming from the all-time high of the market. If you look in 2011, for example, there was between 2008 and 2011, there was a real growth in the market because Hong Kong relaxed import duty. It was kind of the first time that almost like gave access to China, this huge market, at the same time that their economy was booming, to wine, and prices were driven up to unsustainable levels. Policy changes in China came into effect and prices fell quite considerably between 2011 and 2015. But since then, the market has increased by over 100% since that period of time. So I think that, the market does go through cycles. It is affected by what happens in the macro environment as well as what happens in the wine market. And I think the pattern over the past sort of 20 years is that prices have always come back. And I think that it's maybe just testament to how ingrained wine is in global culture. And it is something that, a lot of people around the world are still very passionate about. Things happen in the economy which can affect the demand for wine. But, historically speaking, we've always seen that demand come back.
Well, data shows that Bordeaux and Burgundy wines remain highly sought after, while some other regions have seen softer demand. Macroeconomic factors such as interest rate hikes, inflation, and currency fluctuations, as you mentioned earlier as well, are impacting investor appetite and international trade. So which wine regions or vintages are most affected by the recent price corrections?
I think there hasn't really been anywhere for collectors and investors to hide over the past 2.5 years, unfortunately. Every region has been affected by this because it's been more of a systemic issue, I guess, with regards to how the macro environment has affected the wine market. And, I think some regions have been more affected by others. If you look at Burgundy and Champagne, for example, these are the two regions that have performed the best over the past 10 years and actually reached a high at the kind of peak of the market at the end of 2022 and have since corrected the most. But they were coming from a high base. Bordeaux has been in a general kind of decline for a little while now. Unfortunately, there's just a lot of stock produced from Bordeaux. And there's been very, very good vintages over the past 10 years, which means there's a lot of very good wine on the market. And when you have a scenario where, the liquidity, the number of buyers in the market is at a lower level, you essentially have this scenario where there's a lot of stock on the market, which essentially means that prices are held back. I think that out of all the regions, you look at there's of course some bright spots, individual producers, but I think probably that you look at the Italian wines and they've probably held up the best over that period. We also did a recent strategy based around white Burgundy, and actually if you isolate white Burgundy from the rest of the market, a lot of those producers have actually done very, very well over the last 2.5 years, and that would have been somewhere where investors could have taken refuge over that period. But it's been a scenario where really no corner of the market hasn't really been affected by this.
Okay, so are emerging markets such as China also influencing demand today?
Yeah, of course. China is a huge market for wine. I think that even during a period where we've seen a decline from that market from a demand perspective, unquestionably, it's still a really, really important market. I think that if you look at elsewhere in Asia, I'd say that Asia has been the real growth engine for the wine market over the past 15, 20 years, and it will continue to be so, in my opinion. I think that, there's lots of very young populations throughout the continent. There's lots of, the likes of Indonesia, Philippines, Thailand, these countries are growing quickly, and wine is incredibly popular there, and it's growing all the time alongside that wealth creation side of things within those countries. China is kind of separate to that because it is a relatively mature market now over the last 20 years, since really that kind of 2008 period when Hong Kong relaxed import duty and we started to see wine become more and more popular in China. The development of knowledge, the number of collectors there that really, really understand the market and very, very ingrained in the market has increased massively, and they will continue to be, a really, really important factor in terms of driving the market over the next sort of 5, 10, 15 years and beyond.
Then how has investor behavior changed in response to recent volatility?
Yeah, look, I think like any market, I think when prices are falling, investors tend to be a little bit less happy about that, right? Just naturally speaking. I think that there's been a slight reticence for people to come back in and, the fear of catching a falling knife. And I think that, broadly speaking, over the last 2.5 years, that's probably the right decision to make. Now, there's been opportunities throughout. There's maybe innovative kind of ways you can look at the wine market and look at these kind of periods to try and generate returns, looking to buy wines from people that are looking to sell quickly, or maybe innovative strategies around trading and arbitrage trading that have been possible throughout that period. And they're something that we've been trying to work on with customers to try and take advantage of these conditions. But generally speaking, I think that, the kind of overall interest from investors in this asset class at a time when traditional investments are doing extremely well, US equities, China equities at an all-time high, and you've got a market here that's gone through a difficult period, you can understand why that interest has been slightly waning. Now, on the flip side, you have collectors that like to buy wine and like to enjoy wine, and they've had a great time because a lot of these wines that people have been buying over the last 5 years are now at prices which they were buying 5 years ago or 5, 6 years ago in some cases. So I think people have been buying when they wanted to, looking for value, of course, because there's been some very, very good value positions available. But overall, the investment proposition over the last 2.5 years has been really challenging. And I think that, the appetite and the interest from investors as a result has reflected that.
With Goldman Sachs and other financial institutions, they have noted that fine wine can act as an, alternative investment with low correlation to traditional assets. But of course, there are challenges such as liquidity constraints, storage costs, and, authenticity verification. They remain like significant considerations. So how does fine wine, compare to other alternative investments in terms of risk and returns in the current market?
Yeah, look, I think wine is quite a sophisticated asset class now in comparison to maybe some of those other assets that you mentioned and other things that would kind of fall into this into this space. I think there's a recognized exchange. You can track prices correctly. The liquidity is a lot better and a lot more sophisticated, a lot more regular and mappable than some of those other asset classes. I think that there is cost of carry that you have to consider here for sure, because it's a physical asset and it's a delicate one as well. So it requires specialist storage and handling. But I think from a risk perspective, look, historically, it is an asset class that is, generally speaking, from an investment perspective, quite boring. And by that, I mean, fairly predictable rates of return over a medium to long-term period, very low rates of volatility, and a genuine, track record of being fully diversified with a low correlation to traditional assets. So I think from that perspective, the risk to reward ratio historically has been really, really favorable for wine investors. And that's why people have looked to this asset class. It's not something that you choose as your main sort of focus for your portfolio, but including it as part of a balanced portfolio alongside other asset classes, really does provide that kind of anchor for the overall portfolio to go out and pursue maybe some of those more risk-on assets and generate higher returns. Alongside that, if you're someone who loves wine, well, what better way to build your collection than to invest in it along the way? Because you learn about it, you get access to the wines along the way, and also you can take them out at your leisure and drink them. And that's been the kind of package that people have looked for, and why why they've looked at this area. So I guess it depends on what you're interested in and what your objectives are for the market. But I guess wine investment is actually quite a broad church. It's not necessarily just about the financial numbers.
All right. Are certain vintages or regions safer or more reliable than others then?
Well, I think if you take in the context of now, we look at the market opportunity now. Well, the other side of a market downturn is that you have wines that have come down in price. And I think that now we're starting to see those green shoots start to sprout. You look at this opportunity in this wine market and you think, well, this is very compelling because you've got some of the best wines, the most sought after wines over the last 20 years that have never come down in value. Let's look at Burgundy, for example, have never come down in value because one, the interest is so high, and two, the production is so low. And you have an unusual set of circumstances here where some of those wines have come down by 25, 30% since their peak prices. So you look at that as a region now and think the fundamentals of Burgundy haven't really changed. They are the most popular wines amongst the leading collectors around the world. They're produced in the lowest level of quantity. The added difference here is that they're trading at really, really attractive prices at maybe sort of 5-6 year lows. So I'd say, look, from a risk reward perspective, that looks like a really interesting opportunity for investors. Similar story with Champagne. I'd say with Bordeaux, the other sort of major region, there's unbelievable value around at the moment, for sure. You're able to get top class Bordeaux for less than, 100 pounds GBP for a bottle. I had some Canon 2016 yesterday at an event that we were hosting. And, this is an exceptional wine from an exceptional vintage. And I think the current market value is £75 per bottle, which is pretty extraordinary value in the context of the last sort of 10, 15 years. Look, I think there's great value in Bordeaux, but I think you need to be a little bit more selective because the supply side is so high. I can't see that every single Bordeaux is going to go up in value from here. You have to be very much selective.
Definitely. Well, reports highlight that while prices are lower, risks remain. Wine markets, they're volatile and illiquid, and there's always the potential for counterfeit bottles or misrepresented vintages. And recovery from price dips, I believe, may take years. So what are the current main risks for new investors entering the fine wine market today?
Yeah, look, I think compared to perhaps where the risk was in 2023 or 2022, given the trajectory of the market, I think the risk is inherently lower now in the short term because, we're coming in at a time when prices are at a depressed level. Of course, you have risks from a quality perspective of the stock that you're actually buying. You need to make sure that you're buying from a reputable source. You need to make sure that those provenance checks have been done for you. And particularly with the expensive wines, I think there's an inherent risk there that there are counterfeits out there because it's been documented and they are out there. So I think that from that perspective, that's always a risk, but it's pretty easily mitigated for by working with a reputable company for building the portfolio. I think internally in the market, I think that like any investment, that comes with risk because it is an investment class. I think that, from here, the next kind of 5 years or so, I think he's looking pretty positive for the wine market with lower risk levels because we've come through that correction period already. I'd be very surprised if we see significant declines in prices from here. It would be very unusual, just given what's happening in the market now, given the liquidity that's starting to return. And particularly with interest rates coming down recently, with the recent Fed cut and maybe two more mooted for this year and more in the offing in 2026, I think that, with interest rates coming back down towards sort of 3% per annum, that's a better level for asset classes like this, for people looking for alternative sources of return. And I think we should start to see more liquidity come into the market as a result of that.
All right. Well, some great insights from you there. Thank you so much, Joe, for joining me today.
Thanks very much.
Thank you. That was Joe Alim, Managing Director of Asia of Cult Wines. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.